Now, we want to make this a little bit interactive. So for those of you that have done bank statement loans, if you have anything that you want to ask, or if you have input, please feel to jump in, because the purpose of today is just to kind of really make you guys comfortable with these two products, because coming up in 2022, this is what we're going to be doing. This is where the market's heading. So stop leaving money on the table. So these are the type of borrowers that you can help with non-QM, self-employed, jumbo loans. We always like jumbo loans. Credit issues, life events, asset qualification, and then investors. The bank statement. I think this is my favorite loan of what we have in our product mix, only because it's a conforming loan. They have great credit, they have great assets, they have reserves. We just have to do the income differently. These are people that write everything off on their tax returns. So maybe they're putting 400, 500,000, gross receipts on their tax returns. But by the time the CPA is done, they do a really good job. Maybe they're only making 50,000 on paper. So they need a different way to calculate their income. So we offer a product on bank statements where we will take 12 months of business or personal, and we calculate the income for you up front. That's the key to the program. We calculate the income for you up front. So it kind of takes the fear out of doing a bank statement loan, because at the pre-qual level, if we calculate your income and we give you a pre-approval and we say this is your income calculation, the rest of the loan is conforming. So what's the fear in doing that type of loan? Is there really a fear in doing it when you look at it that way?
Just to digress a little bit, excuse me, I lose my voice. But one thing that we do here at Angel Oak is every one of your deals has to go through an account executive before it makes it into underwriting or gets submitted. So we scrub those files and make sure that you're not going to run into any problems. We ask a lot of questions. We run a full 1003. I know typically you guys have been in the industry, less is better, because if you put it in DO or DU, you're going to have to prove it. For us, we want everything on there. Because we utilize those compensating factors. We talked about common sense approach. You see there's a 700 score for 90. We do 697, 695. If there's a score that's lower and it makes sense and we can get the deal done, we give score exceptions. That's what Stephen was talking about earlier. So just because you see something here in writing, that's what the entities are for. They're going to go to battle for you. They're going to get that income calculated. They're going to look for anything that can catch you. And when you get an approval, we expect that loan to close because it's as solid as it can be. And if we have any questions, we have basically an underwriting support staff that helps us get these loans, any questions that we have, we kind of run them through them if we have anything. So I just wanted you to know that every deal, when she says that the file comes in and is at the pre-qual stage, what happens is that deal comes in, you submit it on our Intuitive website, it comes to us, and then we scrub the crap out of that file until we know that there's not going to be any holes. Yes, ma'am.
So when you do a conventional loan, you have an average income from self-employed for 2 years.
That is correct.
There is an actual calculation. So if I have a borrower that I've already pre-qualified and determined, and because of his, when he filed his taxes for 2022, and last year in 2021, he didn't take all the allowable adjustments that he was able to. So the benefit for him actually going through this program is that he can use for 2021 all the taxes and liabilities that he has on his actual seat.
And we're doing a 12-month look back from 12 months straight back. Your point is that you're doing an average off the calendar year.
Correct. So you're just looking at bank statements?
We're only looking at bank statements. That's it. Say again? No, ma'am. No tax returns are required and no 4506T. We don't want to see your tax returns. And just to let you guys know, the person that is doing that and you're averaging them, let's say that they make $100,000. Well, they probably really make 500. And so the buying power that you're able to give someone off of the bank statement program, where they only qualify income-wise at 100, and we'll cash flow them and see they may be able to qualify. I've literally seen somebody qualify for 250 and go up to about $1 million before.
How about as far as pricing is concerned?
Say again.
Pricing, for example.
Pricing is typically about 1 point to 2 points higher than what your conventional is. And I'm glad you brought that up because I've worked with some I've been on some panels before, and it's funny because one of the guys that was on the panel, he says, I love when they say that rate's too high. And he says, I'll get them on the phone and I'll say, listen, you just need to go file your tax returns and claim everything that you made. And you're gonna have to probably pay in about $100 grand for the last 2 years to qualify for this loan, but I'll get you that rate you want. And he says every time they'll say, what's the next step? So,
Did I miss the borrower paid versus CPA? Borrower prepared versus CPA?
We arbitrarily give you 50% of your bank statements on your calculations. That's what we call an expense factor. So we look at the business. Most businesses, what we'll do is if you're depositing 20 grand a month, you make 10. If you're 100% owner, okay? If you're 50% owner, then you make 5, okay? Because we'll take it in half. So we take 20. If it's 20,000 in deposits on average, we take 50% off the cuff, and that's your income.
But we have the option to go CPA.
You do have an option to go CPA. So if we arbitrarily, because you're going to be talking to your borrowers and asking them what really is your overhead, what is your profitability. So a great example is maybe a realtor that's hit with a 50% expense factor. We get a CPA letter to support what their actual expense factor is, and we can go down to 15%.
But keep in mind, guys, as an AE, Kevin and I do these every day, it is rare that the 50% expense factor won't work. So don't let that be a deterrent. I mean, I would say 9 times out of 10, the 50% expense factor is fine. We still have way more than enough income to qualify. We do get the CPA if the job warrants it, like a realtor, they work from home, and we want to go lower if we need to.
Or somebody that works out of their house.
Yeah.
You know, somebody that's a contractor or somebody like that. They don't have 50% overhead, you know? So we just have to, but we have to start somewhere. And just to let you guys know, that's all. Typically, it's off the business account that you're seeing that 50% expense factor. And on personal is when you see somebody that needs that lower expense factor. If they don't have a business account and you're doing a personal bank statement program, we're going to hit them for the 50 expense factor also, because there is overhead for running your business, period. Okay? For us to be able to figure that out, we just put that 50% expense factor on there. If it's lower, great, just get a CPA to save it.
You know, and keep in mind, you forget how easy this is. All we need is a 1003, a credit report, and the 12 or 24 most recent bank statements. You put that in the quick qual. We send it off to the bank statement review team. Nobody's calculating deposits. Nobody's trying to guess what we count, what we don't count. Goes off to the bank statement review team. They come back with an income figure that's good through underwriting. So we don't even really start the process till we get income calculated, and then you go from there.
So the 12 months versus the 24 months of personal statements, why would, other than obvious reasons of maybe they move more over 24 months, why would we get 24 months versus 12? Was there difference?
80 and below, it's a 1/8 of a point difference,
Okay.
and 85 and 90 is a quarter of a point difference. So you always want to put in 24, and you can always back down to 12.
But sometimes over 24, maybe they had a better year the prior year. We will allow up to a 35% decrease in income year over year.
Okay.
So sometimes it would behoove someone to go 24 if they had a better year, as long as it wasn't more than a 35% decrease.
We typically try to get you guys to ask for the 24. If 24 doesn't work, we'll scrap it and we'll do the 12, and we'll let you know. If you have 18 months, submit the 18, we'll get the 12-month calculated, and we can get the rest later on. Get that deal in there and get it calculated, at least know what you're working with.
Yeah, and guys, this is a product this is where the market's moving, right? This is an untapped market. So there's not a lot of loan officers that are going after the bank statement loan because they think it's hard, but it's really not hard because we do all of the work for you up front. I had a loan last month. It was a refinance, $2 million. The guy had over $2.5 million going through his bank account. He was paying a 10% private money interest rate. And he did not care because he was not going to change the way he does his taxes. If you're shopping in the right buckets and the right ponds, they know what they're doing. They're educated on what they're doing. But the difference is they do not know that you exist. They do not know that there's another way for them to get a loan. They think they either have to go private money or they have to amend their tax returns. They don't know that they can go through Angel Oak and do a bank statement loan and get a rate. And that's where you come in. How do you get in front of those borrowers? How do you market to those borrowers? How do you get that business? Because I'm telling you, it's an untapped market at the moment. And when do you make money? You make money when you're doing something nobody else is doing. So I just urge you to take advantage of it.
Do you have the option for lender pay and do you need a covenant letter from the CPA or just borrower?
So the question is do we allow lender paid? Yes, we have lender paid on this. And what was the second question?
Do you need a covenant letter and is that CPA clear and can be borrowed?
The CPA letter has to come from a third party. That it can be a bookkeeping company or a tax preparer. It has to be a third party. Okay.
So we don't need a number and signature, just all we do signature, right?
You need a
It
signature.
has to be a license.
Has to be a licensed company. Yeah.
And then is the covenant letter on your part, there's a reduction in income or just?
There's no COVID letters that we need at all.
The CPA is the third-party verification. We generally want them to verify how long they've been self-employed and verify what percentage of ownership they have in the business. That's the two pieces of information we need on every CPA letter. That's because we do not have tax returns. So that's the only way we can verify that information. The third piece is if we go below a 50% expense factor, then they would add what that factor is if we're doing that.
She's saying it is easy. It's just easier to get your CPA letter to prove the self-employment because sometimes you don't know what their percentage of ownership if they're with someone else and things like that. So
So I have somebody that called me yesterday and they hadn't filed their taxes in like 5 years. He said that you don't require 4506, so.
person knows to file their taxes. This conversation didn't happen. No tax returns and no 4506. I'll just reiterate that. But if he's got a tax liability, that's what you probably need to work on. Yeah, less is better. Less is better. Yes, sir.
Some of this self-employed people, they don't employ CPAs. They use tax preparers. Would you
Tax preparers are fine.
Okay.
As long as it's a third party,
Okay.
that's fine. Just to let you guys know, all of our loans are on a 30-year fixed. Okay? So they're not ARMs. They're all 30-year fixed. The only thing that I would probably add to that is we do have an option for a 40-year term, 10-year interest only, and a 30-year AM afterwards. So if you are dealing with some people that know how to handle their money, especially on these bigger loan amounts, I would definitely offer that to them. It is a small hit to rate, but you're paying interest only. So, yep.
Prepayment penalty?
The prepayment penalties are not allowed on owner-occupied and second homes. They are allowed on non-owners, and we do have them on non-owners. You can buy them out or buy them down, but we are not a short-term lender. So if you buy it out, I'm going to say, Joe, why are you buying on my prepay? What are you going to do with my loan? And you can't make any yield if you buy it your prepay. Okay.
How long is it?
It's a 3-year, but it can be bought down to a 1-year. And if you take a 4-year, you get a price incentive. So we go either way. I say if they don't know what they're going to do with it, make them keep it a year. You get your full lender paid compensation, so you're good there. That's the best way to do it. If you want to just say, look, keep it for a year. That's it. A year right now it's not gonna hurt. So. Our EPO is 180 days. Any other questions on the bank statement?
Yeah, and that the reason we spent so much time on that was probably over 60% of our business.
67 last year.
67 last year, 400 million in December. What was the year? 4 billion.
Yeah, it was right at 4 billion. This is the best product we have. We've been doing this long enough. We've made plenty of mistakes along the way, but we are a fine old machine now. So.
And we're not planning on getting too far outside the lines. So we're not going to be having all these crazy programs that you're seeing from other lenders. we're staying right down the fairway, doing what we do best, trying to streamline it so that you guys will call us.
Do you want to go over this?
I mean, these are just some scenarios up here that we have done at Angel Oak. 2.6 million loan for a non-warrantable condo closed using 12-month business bank statements. It had to be closed within 15 days. We did it loan signed, funded, recorded on the closing date of contract. What?
Nothing. I was just going to say that our typical turn time is 15 to 20 business days. So, but we've closed loans in 10 days.
Yeah, we
8
have.
days. It's all on you guys. So.
Now you can see here, 2.6, 3 million. We like the larger loan amounts. I mean, I'm going to say if you're going to go out and look for bank statement loans, why not go to that $1 million market? They're just as much work as a $150,000 loan. So we close a lot of those bigger loan sizes, and those borrowers, like I said, they have the assets, they have the reserves. Like once we calculate the income at the pre-qual level, the hard part's done. Self-employed buyer makes $200 per year, has a credit score of 758. He writes off 70% of his income. He's now left with $50,000 trying to qualify for a jumbo loan. He doesn't qualify. Bank statement loan made it happen. So this is again, looking at their gross receipts on their tax returns, they make more than enough money. Once they take all the write-offs on paper, they do not qualify. So I think the bank statement loan, just using the deposits, is the way to go. And a lot of loan officers don't have enough information on it to be able to even offer it to their borrowers. So I think, becoming educated in that loan program is essential, especially, going into 2022.
So this is our quick qual that we were talking about. So you go in, 1003 credit report, 12 or 24 bank statements. We come back after our bank statement review team reviews income, and we send this back to you. So pass is always a good sign. You don't want anything else but pass. Shows the income for 12 and 24 months, if you can see that. 98,167. I need a lot more of those accounts. And you see it's good till October 2nd. So you got somebody going out shopping for a home. They don't have a home yet. It's pretty easy to find them in Atlanta, right? Yeah. So they're going out shopping. How much do I qualify for? We'll take a quick qual with a TBD. Tell us how much they're trying to do, and we'll come back and tell you what they qualify for. You can't enter the loan as a TBD, but we can at least get this part down. So they kind of know how much money they can go shopping with. Reviewer comments. This is the part that you and I don't like to do. You see the part down here about all the stuff they take or don't take as far as refund in the month of May. That would drive me crazy doing bank statement.
The things that you're going to see on here, you see refunds, obviously those are backed out. But W-2 income, I'm sure the question that y'all haven't asked will come up is, do we allow a co-borrower to have W-2 income? We do. We verify that they actually got that W-2 and get a 4506T on that. So we back out anything that's wages going into the bank statements, back it out, and then we take their actual gross income. We've seen a lot of these lately, SBADs. These are the loans that are all the self-employed people got, so we see a high number of those come in.
So these are a lot of the common questions that we get on the bank statement loan. So from everything that we've told you today, how difficult do you think it is to do a bank statement loan? Or do you feel better about doing a bank statement loan knowing that we do the income for you?
I know somebody that my wife's a broker. She ordered an appraisal on Monday. It came in on Thursday. So
I think it depends on the market, depends on the
market.
AMC.
The bigger
right?
the city, the better.
Mm-hmm.
Do you guys allow a transfer appraisal? Like,
We
does
do.
the appraisal has to be your name?
No, it doesn't. We allow a transfer appraisal. We do.
As long as it's from an AMC.
Types of accounts allowed, we'll do business or personal bank statements. We do cash out refinances, rate and terms, or purchases. 1099, we do 1099 borrowers. Now we can, just do a 2-year average of the 1099s itself. We do have to take an expense factor as well, so it's very similar to our bank statement loan. If you have a customer that works for a company and they've been there for at least 2 years, then I would say 1099s are the way to go, right? You just get a VOE with a start date, and if they're 1099, we take an average and hit with an expense factor. If you have someone who's 1099 and receives a lot of 1099s from a lot of different places, for instance, like a contractor, then I say your best route is just to go 12-month bank statements. So it just kind of depends on what 1099 are. And Kevin and I will kind of help you guys determine the best route if you have a 1099 borrower.
Yes, ma'am.
No, go ahead.
I pretty much have done like self-employed individuals with 2-year average of their income over 2 years. So if they actually own the actual business, they are an incorporated entity, LLC, so on and so forth. So how do you actually determine if they're owners, they pay themselves, but they don't issue themselves a W-2, they don't issue themselves a 1099?
We're just using the bank statements. We're just using the business bank statements.
I'll be
Yeah.
honest, the 1099 works at the beginning of the year. It really don't work because when you get in the middle of the year, you're taking 2-year average and you're doing a 2.5-year average. So to me, I'd rather just grab the 12-month bank statements and get the money that he's throwing in there. The only time I usually typically go 1099 is when you got that guy that doesn't put it in the bank. Y'all have heard about cash, right?
And then one borrower has a W-2. I think Larry kind of went over that. So we get that question a lot. People just don't realize that we can do a combination of bank statements and W-2. The only thing I would say, do not upload tax returns on your W-2 borrower. That's the fastest way to kill a bank statement loan. So that's a bad word for our loan
We don't
purpose.
even want when you submit the pre-qual for you to put
Yeah,
in
no
income.
tax returns.
No
None.
tax returns, no income. Let us do that for you.
We will take the lower of the two.
Yeah. One other thing that I wanted you guys to know that I don't know if it's on these slides, but we take a primary wage earner score. We use a primary wage earner score. If you do have a bank statement deal, if you can truly determine who the wage earner is, so if you have a W-2 borrower and you have a self-employed borrower, that's easy. But if you have 2 people, maybe one person doesn't work, then we're going to take the lower of the 2 in that scenario. But a full doc deal, and if you can prove who the wage earner is or the primary wage earner is, we take the primary wage earner score.
Okay, who's done an investor cash flow?
Ooh, you excited?
I am excited. I love this product. Who's done one of these? You have? You have? Was it easy?
Y'all know about this? Okay, good.
So investor cash flow for us, for Angel Oak, you have to own a primary for 12 months, paid on time. You can buy an investment property as a no-doc product. So what that means, no income, no debt ratio. So it's a pretty easy loan to close, right? Because up front, Kevin and I are pre-approving the credit, making sure they have the trade lines, making sure they have a primary. That is a hard stop. They have to own a primary for 12. What we don't want is someone trying to use this product to buy a primary. So that's why that is a hard stop for us. We use the market rent analysis on the appraisal to cover the PITI. So if your market rent analysis comes back on your subject property and says this property will rent for $2,000 a month, as long as your mortgage payment does not exceed $2,000 a month, the loan qualifies. It's a 1-to-1 ratio. Now, where it gets better is at 75% with a 700 score, we're going to waive the DSCR altogether. So they don't even have to cover the DSCR. The rent does not even have to cover the mortgage payment.
That's typical down
On the coast.
Beach properties is a great example of something that's more seasonal. Because when you get a rent analysis, it's for what is rent for monthly. Well, if you do an average on that beach house, it's not going to average very well, but they probably make 3 times as much in their season. So it's 75% and below, we're not going to care what the rent comes in at. Okay, you do have to have a 700 score.
which the average score is 700.
742 is our average score overall.
And we do allow short-term rentals as of last week.
Yes, in a condo
We
complex.
do, we do not do condo hotels, but we do allow short-term rental.
So this is a very easy product. Some of the things that my LOs have given me feedback on that they really like is, number one, we allow interest only. So a lot of investors really love to hear that they can offer interest only payments on this loan product down to $150,000. They can do interest only. Another thing is that we allow them to title in an LLC. Now that LLC has to have the purpose for managing properties, but investors love to hear that they can do that as well. So those are two really big selling factors when you're selling this product. We will do up to $5 or $3 million for one borrower. We can do them all at one time, and they can own unlimited properties. So we do not have like a property limit like Fannie. You can't own more than 10 investment. So those are the kind of the pitfalls where we can come in and offer that borrower. They can buy $3 million additional investor cash flow or investment property. What do you guys think about that?
Make sure that they understand.
No job listed, no income listed on the 1003.
No debt ratio.
So you're really throwing a 30-day bank statement in there to show that they have the money to put down on the property, and no income, no employment. I mean, this is a slam dunk, pretty easy type deal. And these guys really, once they get one, they don't want to stop at one. They'll want 2 or 3.
You had a question?
So if you start out at a 75, it's not a DSC.
We start out at 80. At 80%, we can go up to 80%. The 75 was for no DSCR. Like you don't have.
That's what I'm asking.
Yeah.
We can waive it completely with a 700 score at 75. Now, just think about this for a minute. If you're trying to, if you're trying to build your business, if you're trying to get more business, think about a hard money lender. Hard money lenders already, they want to keep the loan on their books, 18 months? You already have a low LTV. You already probably know what they're renting the property for. I mean, if you can network and get in with a couple of hard money lenders that can feed you 2 or 3 of those refinances every month, to me, that's pretty easy money. It's just about networking with the right people. Because on a refinance, if we know what they're renting the property for, let's say the DSCR comes in lower than what they're renting it for, which that normally doesn't happen. But if we prove the rent for 3 months, we can use that amount. So you already know if the loan qualifies at the pre-qual level. Does that make sense?
So on that, so you're going off the lease or lease in place versus an.
No, we always get the appraisal because we were going to have the 1007 no matter what. And if that comes in and it covers 1-to-1, great, we move on. But let's say, for instance, we have a refi, the DSCR came in at 1,000. The payment's 1,200, but they already have the property rented for 1,200. With 3 months proof of receipt of rent, then we can override the 1007 and use the 1,200. So on refis, you kind of know if it qualifies when you're taking the application.
Bought a place that was rented prior to, or they're buying it, and it was into prior for 12 months, and they could show that history, or does it have to be in their name?
Only on refis.
Only on
Only
refis.
on refis.
Hopefully, if that appraiser's in there, he's asking.
He's
that
asking the
person how much
question.
is written
Yeah.
for. There's a hint there.
Now, when we were saying, do you know what percentage of business this is for us? Do you know the number?
It's right at, I want to say 16, really 16 last year. I want to say 17. So between the, like you said, it was almost 90% of our business. So the 67 on bank statements, so it's right there at 84%.
But I'm seeing in my personal day-to-day business, I'm seeing a huge increase in this type of business because of VRBOs. So everybody now, they're buying rental property, especially down on the coast, and they're wanting to rent out VRBO. So I'm seeing a really big increase. And the good thing is we go to $1.5 million loan amount on this.
And on the other side, we go down to 75.
I don't like that question. When they say, what's your minimum loan amount? I'm like,
But going back to D and talking about the hard money, those guys they really want that off their line. They're in it for short term. They made all their money on the points on the front typically. So they're ready to put their money back to work and get it off their line typically.
Regarding the short-term rentals, what's the maximum LTV on those?
75. Any other questions?
They just can't be a condo tel.
And you might have got an email on that today if you're in our database. And if you didn't get that email, could you let Stephen Winnicker know back there?
Yeah.
On the serious note, if you guys are not getting our emails, please let us know. We want to make sure that you guys are getting. We do about one email a week, just to let you know. Yes, ma'am.
So is your definition of a condo tel the same as Fannie Mae? Is that all?
Typically, yeah. Something that has a front desk, like a check-in, like a hotel, basically. So, like Grand Harbor down in Destin, no. You know,
And
so,
Panhandle seems to all be.
it seems like Panhandle has a lot of condo hotels, yes. Panama City. Any other questions? And by the way, you'll get a deal if you have a realtor presentation. The first thing that the realtor thinks is that they can give, because every realtor has an investor, right? Every one of them. I'm just going to tell you this about realtors: don't let them pre-qualify your borrowers. Make sure they know about these products. So.
Want me to read it? Okay. So these are some of our scenarios that we've run into on investor cash flow loans. So the top one we've talked about, investors looking to purchase her 19th investment property. Her prior funding was costly because it was hard money with high rates and fees. She's unable to qualify for a mortgage using tax returns. After a written analysis was completed, she was able to qualify on the expected cash flow of the property.
Anybody just take cash, get delayed through delayed financing.
Yeah, borrowers turned away from hard money lenders who exceed the 10-loan limit from Fannie Mae. Delayed financing, if anybody hasn't used that before, that's available in all of our programs. We've been seeing that a lot with all the price wars, people paying cash for houses.
The last thing I do want to say about this investor, you said it's starting to peak up in your business. With them tightening on the investor products and the second homes of Fannie and Freddie, we're seeing a lot of push. They do things and strategically do things that are helping us. They may not say it, but they really only want owner occupied. So what they're doing is they're tightening up DO. I've literally seen somebody get approved 2 months ago, and then they're not approved today. Because that's an updated release by Fannie Mae. They're putting a little squeeze on there. So.
Investor has a dozen properties all in one town, looking to cash those out to be ready to buy more. Things go worse. Should we tie those together or have to be individual?
It's considered
Individual.
Individual.
They have to be individual.
Pardon?
It's considered a blanket loan.
Can we do that?
No, we do not offer blanket loans.
But we could do them all at one time.
And you get one underwriter.
You get one underwriter to do all of them at one time.
So we could, the state put 4 or 5 together.
Individually.
Yeah.
One at a time. Yeah.
You can
You
do
can close them together, you can do all that together, but it's individual.
loan transactions. Right.
Trying to cut some costs as far as.
Personal income, no personal income on investor cash flow. I'll let you guys answer this. Primary home required, yes or no? Yes. That is a hard stop, so just keep that in mind. Close faster than other mortgage loans, absolutely. We have a lot less documentation, a lot less underwriting has to happen on these files, so I would say they close faster. Multiple borrowers in an LLC. Any borrowers that are in the LLC have to be on our loan. Now, we do not have seasoning on an LLC. So if you need to have your borrower go open an LLC as a single member for the purpose of managing properties. We've had borrowers. If you need that, we have that. And number of properties, unlimited. We'll do up to 5 or 3 million for one borrower. Now, Kevin and I, let's say you guys put together a meeting, with a hard money lender or with a realtor group or with any investor group, and you want to do a presentation. Kevin and I are available to go with you to these presentations. We'll put on your shirt, your loan lender shirt. We'll be your consultant, your underwriter, whatever you want to call us. We do not give out our information, but we're available to kind of help you get in front of these groups of people and to feel confident doing so. So I say it's better to get a big group of people together and talk to, lots of people at one time instead of one-on-one. So if any of you, get our cards after this meeting, and we'll be happy.
And you only get one of them. You don't get both of them at the same time. Just saying. I'll come.
What's the max number of members that
It's 2.
It's 2, but we made exceptions for 3. It's just a hassle to do everybody's credit report, 1003.
4 applications.
Yeah.
It's hard to put that in the system. That's the biggest issue. We could probably care less if they had 10. How do you process that is a bigger question.
How do you close that in 14 days?
We can do up to $3 million worth, or 5 loans. Like you can have 10 loans if they're $300,000 each. You can do 10. You can do 150, 20 loans, up to $3 million in loans.
Do you have an exception?
Yes.
Not while we're being recorded.
We have an exception to do more on a case-by-case basis, right? Yes.
Not all at the same time.
Case by case basis.
Okay, so this is kind of just our Just Miss programs. We have 2 of them. This is the Prime Jumbo. These loans are really, we're just going to do the highlights, are more for people that on a BK foreclosure. This product requires 4 years versus I think the Fannie Mae is 7. We do have a 95-1 loan on this, no MI on any of our, no MI on any products that we have.
So just to go back a little bit, when we started in 2013, there was a high number of loans that the banks were sitting on, and we offered back then a 1 day out of foreclosure. After COVID hit, we really didn't see 1 day out of foreclosure, and it wasn't someone that was just sitting in their house not paying their bills. It was somebody that had overcome a life event, but the bank was still holding on to it. So a lot of the programs that we have right now are loans that people have gotten past their life event, so to speak, and we're offering products that don't meet the traditional timeline for your BK short sale foreclosure. So particularly on this one, it's 4 years out. So on the jumbo, you're not going to be able to get a true jumbo loan. You're not going to be able to get 4 years out on that BK short sale foreclosure.
This is the second kind of Just Miss product. This is our Portfolio Select. It goes up to $2.5 million. This one is 1 year seasoning out of foreclosure or 2 years seasoning out of BK. And both of these products on the Just Missed are full doc loans.
That is our most forgiving product. Full doc. Closed loan, $1.3 million, home for family, was turned down by 2 other lenders due to foreclosure that occurred 2 years ago. Full doc program got it done. Okay, so I get this call a lot. People call and saying, hey, I've got this great borrower, it's a friend of mine, and he's got this much money and everything's good. I'm like going, get to the point, let me know what's wrong with this loan. Tell us what's wrong with it, why you're not going Fannie or Freddie. You wouldn't be calling me if you weren't. And we can see if we can get it done. So this happens all the time, every day. Tell us the problem up front, and we'll tell you if we can do it or not.
So the most common questions, again, seasoning requirements, the Platinum is 4 years. Portfolio Select is 1 year on foreclosure, 2 years on BK. We allow, condos, single family, 2 to 4 units, non-warrantable condos we offer across the board on all of our programs. Investment properties or second homes, yes, and the DTI on the back end is 50. It's 40 on the front, 50 on the back.
Anybody have any questions on those, the full doc loans?
Gotta go, okay. So the asset qualifier, I mean, I love it when I get this loan because the typical borrower, usually has $5 or $6 million, right? So I had football players in between contracts, hadn't tied up the first contract. We used just the assets to qualify the loan. So Kevin and I will run like a calculation based off the assets and what type of accounts those sit in, and we'll let you know if it qualifies or not. No 4506 is required. 5-year seasoning on foreclosure, short sale, or bankruptcy will go up to $3 million. There's no DTI restrictions because we're purely calculating off the assets. We have to have 60 months of recurring monthly payments and $500,000 in post-closing assets. The assets must be sourced and seasoned for 6 months. So if you have a borrower who just got a $3 million inheritance and they want to go out and buy a house based off of this loan, it would not work. You're going to have to wait, and the money's going to have to be seasoned for at least 6 months. So the underwriter is going to ask for a current statement, and they're going to ask for an asset statement from 6 months ago to make sure that they've had the money for 6 months. This is great for retired people. Financial planners are a huge resource for this type of loan because they don't want their customers coming and cashing out $600,000 to buy a house when they can really just cash out 25% and leave the rest of the money sitting in their portfolio. So financial planners give a lot of referrals for this asset loan. Does anybody have any questions on the asset qualifier? Moving what?
How is that calculated? How is that calculated?
As far as what?
$3 million in assets.
It's going to depend on what the asset is.
Monthly income.
There's no monthly income.
You don't figure the assets. You
No,
just need to know.
we have a program like that. That's kind of like what you're talking about. That's asset depletion. Depletion. I have to look at the name. Asset depletion, and that's based off retirement age and more like a conventional type. But no, the money we have a handy dandy worksheet and basically plug it in and calculates how much money we can use off of it.
Yeah, we kind of give you a pass-fail. So what's really important on this loan product is on your 1003, make sure that you're filling out every asset, make sure that you're stating which type of account, depending on stock account, IRA, 401k, because we give a certain percentage based on the type of account. And then Kevin and I will do the calculation and let you know.
Quit acting like y'all are a team.
Yeah.
We're a team.
No. She does it or he does it.
What'd you say? Okay, go ahead.
So you got it.
Just all other monthly payments. So whatever bills they have, right? Monthly.
If they've got $1,000
We're gonna do 5 years to make sure they have that as part of the calculation.
Oh, they also have to have 60 months of recurring debt in your account.
Correct.
Correct. Yep.
So we know that they can make those payments for 5 years.
So a borrower recently sold their multi-million-dollar business. She started a new business less than 2 years ago. When she tried to qualify for a loan, it was rejected. She didn't have a long enough self-employment history. Her plans of moving into her dream home were almost derailed. Asset qualifier saved the deal. So that's a perfect example of someone, you sell a business, the money's not seasoned per se, right? Or you have to wait 6 months for the money to be seasoned, but she, became self-employed but doesn't have the history. So maybe she's self-employed for 18 months. You could use those assets to qualify.
All right, we're about to roll. We got 5 minutes. Okay. All right.
We're going to go fast now.
I'm going to speed it up a little bit. All right, asset qualifier, we're going to skip that. Foreign national, we have a foreign national program. It's basically for people that live abroad. They don't live here, but they want to buy a property here. We allow that type of program, and it's simply going to go on our DSCR program.
It's going to go on the DSCR, but there's no credit, no income, no ratio. So all it is an asset loan.
Yep.
So all you have to know is what type of visa they have, and the assets have been in a U.S. account for 30 days. I don't know if anyone does foreign national, if anyone's licensed in Florida. We see more of those down on the coast, but it's really an asset loan, basically. Say that again?
They will have
They have to have one of these visa types.
But if it's like Canada, we're fine. Yeah. So it depends on where they live, and we have a handy dandy.
We have the visa waiver list of countries that qualify.
In Europe, you don't need wherever you need a visa to go there, they need a visa to come here. So we make them have that visa so we know that they're really coming here. Okay.
Okay,
No.
just go. We already answered that.
I-10 program, those are for the people that are here, that are working, that aren't supposed to be here. Pretty much, right?
That should have was politically.
Say again? Yeah, they pay taxes, as long as they're paying taxes.
It's a full doc. It's a full doc.
It's a full doc deal. I mean, typically we see self-employed people that are filing their taxes, but they're just, they get along, yes. So, moving on. Common sense question, I-10, I'm gonna skip that. All right, what's next? Where can you find more non-QM? That's where I think somebody wanted to know. Realtors. I'll tell you, this is probably one of my favorite. Credit unions. I love credit unions because the credit unions are always going to take care of their clients. They're always going to do the best for their client, and they're probably never going to get set up with Angel Oak. So it's a great place to go get business. So if you know big banks or banks that are going to refer that out, like Wells Fargo, they're not going to set up with us probably, maybe not, maybe. But no, that's about, and then we touched on CPAs.
But hold on, CPAs, that's a great resource for bank statement loans. I have LOs that I've done presentations for CPA groups, and I have one LO, he's gotten 3 referrals thus far. So once you show them that you can do their loan, I was talking to someone out earlier at the booth, and she's about to do a loan for her own CPA. I'm like, well, that's great. You're going to have a testimonial right there after you complete her loan, and then you can advertise that to all the other CPAs. So anything you can network with CPAs, you're going to get a lot of bank statement loans.
Divorce attorneys, financial planners, bankers, builders, hard money. Really, it's really good just getting out there, guys. Honestly, just preaching the word.
Okay, so these are the most common bank statement borrowers. So based off of our business, 17% were professional business services, 15% construction home improvement, and 9% came from real estate. So every one of your real estate agents is going to be happy to hear about a bank statement loan. Every time I do a presentation with one of my LOs for a real estate office, they all perk up when we talk about bank statement loans, because a lot of times that's how they have to qualify. So they understand it because that fits their bucket.
I wonder what the other 59% is.
Uber drivers, truck drivers, restaurant owners.
So, how to find them? Mark yourself. Go ahead.
Yes, please. I get excited about this. So please use this. If you have a login to our portal, we have done all of the advertising for you. It's all done. All you have to go in, your name even populates onto the information. All you have to do is insert your logo. Now, you have flyers, you have social media content. All you have to do is copy and paste it. Stop doing that. All you have to do is copy and paste the social media content onto your social media. Like, we've already come up with all of the verbiage. These whiteboards here, these are videos that kind of break down, you have a self-employed borrower, it's like a video for the typical borrower that it breaks it down so they can understand it. You can download those and put that on your social media.
It doesn't say anything about Angel Oak either.
Yeah, nothing's branded with Angel Oak.
So any of our content on there. We want you guys to market our products with your logo and your name. So, and this is a great resource. And by the way, if you do it once, you go in, you put your information in, and there's a drop down for every flyer. So once you put the content in there once, it pops right in everyone.
Yeah. So you don't have to think about what to say or how to start. A lot of people won't start because they don't know how to word it or they don't know how to put it on their, information. So I like that portal, and I wish more people would, take advantage of that.
I run through this.
Key characteristics in choosing a non-QM lender: customer-centric, non-agency specialist, focuses on non-QM, years of experience, easy to work with, top-notch AEs, makes exceptions autonomously.
Okay, we're good.
Does everyone know where we're located? I got cut off. Does everyone know where we're located? So we're a global lender. We are located right here in Atlanta, headquarters, off Hammond Drive and 400. So we're in your neighborhood. So
Can't drop packages off.
we've got we've got underwriters, disclosures. Everybody's here. So it's.
It looks like our time is up. Thank you for y'all's time. Please stop by.